this is just an indicator. This is not a trading method. You shouldn't be deriving trades simply off of what you see occurring on the volume at price indicator. And the reason is simply that there's areas of congestion will make it look like there's something going on there, and it's really just noise. So you just gotta know that and recognize that. And I highly recommend having predetermined trade locations and using this tool as your confirmation for that. So with that being said, we want to see key elements that occur at those predetermined trade locations. So the first thing we want to see is a change in order flow. So what do I mean by that? Well, we want to see passive activity absorbing all the opposing orders that are coming to that particular level. So kind of like what I just referenced in the other slide, we want to see either passive buyers, or let's just say in this case, let's say there's a passive seller at a particular high, and or perceived area of resistance, and maybe we want to get short there. So what we want to see is either you take your trade right away or you wait to see this, but you want to see passive activity where the sellers are absorbing all the buyers at that particular level. So they're taking out that inventory and basically just stopping price in its place. And then once that occurs and all the inventory is taken out, we want to see a quick response to that, meaning we want to see aggressive activity stepping in, where since we're going short, we want to see sellers taking the initiative to push the market quickly away from our entry area. And what I mean by that is what I just referenced. We want to see market orders hitting the bid, pushing price lower quickly. Not only is this continued sellers stepping into the market, it's also potential people that are long and caught in this particular situation, and they're flattening their trades, or their stops are being hit, or what have you. So this is what we want to see. We want to see a stopping volume, and then quickly price changing into the direction of our trade, and opposing order flow, meaning sellers taking the initiative to push price lower by hitting the bid. So this is just a scenario that I'm going to use, and I'll provide several scenarios here. But what I'm doing is I'll provide you with more of a top-down type analysis of finding a trade location and using different tools to identify that location, and then bringing in the volume at price tool to confirm either you've taken the trade already or you wait for confirmation on the tool and take it from there. So with that being said, I just want to make clear that this isn't telling you how to trade or anything. I'm just using this as an example because this is how I trade, and I'm trying to just give you a clear sense of how I utilize this tool to that advantage. So we had an open in this particular session within the previous session's balance area, and the market traded down to this previous point of control and found support there, or in that area. And the market then found buyers there, and they took initiative to lift the offer quickly up and out of there, and continue to buy this market all the way up. And this was actually our most recent high that we have in the market. And there's a lot of volume that got let out at this high level here. And once that occurred, the market finally came back into balance for this particular day, and two-way trade returned to the market. And the market then came up and tested the value area high of this particular day, and a short trade based on all that information made sense with a target to the other side of value. And I'll show this with other indicators as well, just to kind of give you a better sense of what I'm referring to. So this is the same scenario, and we're looking at a Globex session of the VWAP indicator. So again, the market opened within the previous session's balance. In addition to that, it was trading within its overnight session's balance and within its value area. And then once the market opened, we immediately came down and tested this 1.5 to 2 standard deviation level area. So that paired well with the point of control that I just pointed out. So that's a great trade location, because the market just went from being balanced and in value outside of that into a key reference area, and then quickly moved right back up into value, and in fact became imbalanced on the buy side. As we can see, the market rejected value all the way back up there. And then once all that volume came into the market, it was just a two-way trade. Clearly came back in, and the market was right back into the day's value, and then it ran up outside of value again and to this 1.5 standard deviation level. And those that keep track of where some of my trade locations occur, when the market's imbalanced, this 1.5 level is usually a great place to fade that move, and then have it look back, just basically a return to the median there. So from imbalance to balance, imbalance back to balance, basically. And then this is what it looked like on the daily bar chart. So the previous session had a very strong move up higher, closed at the top of that bar. The next session opened basically at the same area close, and just kind of tested a little bit into that range, and it quickly moved right back out and continued to rally higher. So a very bullish situation here with the market just one time framing higher. And then this is what it looked like on the volume at price tool. So this is obviously a zoomed out perspective, and I'll provide you with a zoomed in one as well. But what we see here again is this red line was our previous session's point of control. We're trading within the previous session's value area, and this red line below this is our overnight low. So that's a good reference point for you. And then we see that there was some buying absorption. This is the open bar here. Again, I'll show a zoomed in version of this, but here's our open, just a kind of a mixed tape, and then we traded down to that key area, and there was buying support that came in. Delta went positive, and buyers took the initiative to lift the offer quickly out of there, and then the market just continued to trade higher. And then this was our high volume bar here, and the market came back into balance, and then came up to this this high, basically stopped right at this high volume cluster area, and that was our value area high. And then we would take a short here with the idea of moving to the other side of value, and then when I zoom in you can see this, but the volume point of control for this particular bar happened to be right at the value area low, so that made perfect sense there to take that trade and cover right there. The market in this type of scenario, it's not going to just come and collapse all the way down on itself. The value area low should typically hold the market there. So and then exactly what happened there. And as I referenced earlier, there are complementary indicators to use with this tool. I mean, you can see here how, just a visual reference, how the delta was very positive up until this point here, where this large volume let out, and then we see a kind of it's a clear change in sentiment and order flow here. And then moving back up, we had positive delta running up, and then once we got to our reference point, we had negative delta again. And then we saw these next two bars, strong down bar, and then where people were covering their position at the value area low, it was negative, but you can see how that there was buying coming in there. So just a great visual to work with there. And this is just the zoomed in version of that. So this is our opening bar, just a lot of different types of orders coming in there, but the key thing is that there was a large volume at the low end of this bar. The market did auction lower, but it was met with just more buying there, and we had a volume point of control of this bar right at the low, and the volume itself was a lot less. And the reason for that is that buyers really took the initiative to step in and lift the offer higher, and it was really just a quick move through here. So there wasn't, like in this bar here, the market spent quite some time there, and then once we get out of that area, a lot of buying came in and quickly moved right back through that area, and the market stayed above that level from that point on. So very key. And then you can see how that there were more buyers at this level as well. And then this is the liquidation bar, I guess you could say, where all that volume was let out. So two-way trade came back into the market. There were sellers present at that point. Market traded back down, uh, kind of looks like there's some short or some sellers covering there, or possibly some buyers stepping in, and this orange line is the initial balance high for the day, and buyers stepped in, and it was really just a battle, just real thick volume here, and came a little bit imbalanced here, but then we finally got up to our key reference area here, and we can clearly see that there was a major imbalance on the offer at these higher prices. So what that tells me is simply those that were long the market and didn't get out here, and the market started going against them, and then it started coming right back up, they got out there. So basically just more liquidation there, which helps with your trade, so the market goes back and tests the value on the other side of the market. So in our second scenario here, we have this is just our daily bar chart, and we have a bracket area that the market's been battling with on both the lower end as well as the higher end, and we had the market making an expansion run outside of this bracket, and for some reason or another the market ended up selling off the next day, and our next open was at the lower distribution of this major move down, and we came up and tested that bracket area high, which was previous resistance. So that's a great trade location because the market came back into balance. The idea then is rejection at this level with the destination going to this level down here. So this is our trade location from a bigger picture, and we just need to find that now in more micro perspective. And again, this is not a way to tell you how to trade or anything, but this is simply a explanation of how I use this and bring in the volume at price tool. So some other elements that were confluent with our resistance area was the monthly VWAP as well as the previous month's value area high close level. The weekly VWAP was right there as well. And then this is what it looked like on the volume at price tool. So really in this situation is there's a few things that occurred that were very helpful with the trade location. So the market opened down here, and it was really just sideways action, and then for one reason or another the auction quickly lifted up out of there. So we had in this case an incomplete auction at the low of this bar, and buyers stepped in, and we finally started seeing some imbalance. There were some sellers starting to step in, and just kind of a mixed tape at that point. It was a battle, and the market just was able to continue to move higher though. And then we leave another massive incomplete auction at the low of this bar, and then we finally get up to our target area, or our area that we want to take a trade, and we see here massive absorption. So what that is passive sellers absorbing all the inventory up here. So not only that, it's people that were long from here are targeting this area as well. So it's kind of a combination of the two, but essentially all the inventory that was up here got cleaned out on the buy side anyway, and sellers overtook the buyers, and it was a bit of a struggle in the middle of this bar, but the volume point of control was fairly at the high of the bar, and then selling finally came in, and volume just kind of got thin below this cluster area, and then we traded back into this previous session's value area, and the market opened up here and traded to the top of this value, and there was more absorbing sellers here, and then they really hit the bid and the market traded lower from there. So that's kind of what you see, or what you want to see, as far as either you're in the trade already or you're waiting to see this first, and then you join into the market from there. And if you missed that, obviously this would be another great place. And then this is just what it looks like on a more zoomed in perspective. So again, we can clearly see a very large imbalance here right at the high, and then the volume really thins out. It's really just a fast move below there, and then more absorbing sellers are stepping in, and then the market just continues to auction lower. And this is our incomplete auction level here. Look at all the volume that printed at that level. So just some other small clues to really key you in on what's occurring there. And this bar closed with the incomplete auction and quickly came up, and there was actually more selling to be done. So that's very nice absorption again, with sellers stepping in passively, and then they hit the bid with a major sell side imbalance on the move down. Okay, in this third example, this was kind of what I was referring to a few slides back with watching the algorithmic orders firing off into the market. And when the market's so imbalanced, every time price touches the top of that perceived value, buyers step in, and they'll fill as many orders as they can here, but once the market trades away, they have to enter into the market via market buy orders. Again here, again here. I didn't circle that, but that was definitely a clear area as well. And again here, and then these are all market orders, just major imbalance, and it slows down, but we touch value again, and they start buying it again. Touch value again, they start buying it again, and then finally we get this like flush-like move, kind of what I referred to earlier with just a major imbalance in the market, and just takes out all that inventory. The market did continue to trade higher, but you can see that changed the tone of the remaining of the day. It was just major imbalance there, so just something to really keep an eye on here, and I'll show you some zoomed in versions of this. So again, as the market came down to the top of value, all these buy orders are firing off, absorbing all the inventory at these levels, and this is still, very imbalanced, and the market can't even trade back into value. So it's just buyers are just coming in passively, and then as price trades away, they need to get in and fill those orders away from value through market orders. And as I was saying with the algorithms, is it's based on an average price, and obviously this is our average price, this level here. However, when the market is so imbalanced, the best execution you can get is the top of value. So clearly that's the case here, and it's something to, like I said, keep an eye on. So there was a few terms I may have mentioned in this presentation that you may not be completely familiar with, and really what those are volume at price indicator nuances. So they're unique to this particular indicator. And the first one, and I did mention this just recently, was an incomplete auction. And what that is basically each price bar represents obviously an auction taking place, and one side of the market, as the market moves back or forth, should exhaust itself. So for example, the top of a price bar should have volume printing at the offer but nothing at the bid, and vice versa. The low of the bar should be volume at the bid but nothing at the offer. Basically that means is the market exhausted itself at both of those extremes, and I'll show you visual examples of that as well. Another nuance is the volume points of control that form within each price bar, and really all that is just showing you the most traded price within that particular bar, and that can really give you a good sense of the underlying sentiment of the market just based on the location of where this particular level ends up forming. And it also actually will help you with in the preceding bars after that, how price reacts to that level can be another clear indication of what's occurring. And then the last thing is low volume areas. Usually these low volume areas are basically knee-jerk reactions to maybe some news that occurs, and I did show something like that to an extent earlier. But basically the market just becomes dislocated on a temporary basis and quickly moves to one particular area, and then comes back in to where that fast move moved through to fill in those remaining orders that wanted to transact there. So I'll show you examples of this and how it could benefit you in your trade management. So incomplete auctions. As I explained, this represents an area where the market did not exhaust itself. the market will often revisit these levels to see if there's still business to be done there. This is very similar to the market profile concept of a poor high or a poor low. Basically, the market did not exhaust itself at that level and did not establish any sort of excess there. However, there are some exceptions to this, and it really just depends on where it occurs. So sometimes you see an incomplete auction, just like a poor high or a poor low, that could represent a key reversal area. So that's very important to be aware of that. And then during times of chaos or low liquidity, or some news being let out or something like that, you just say like the Fed FOMC announcement or something, you'll see the market trade very fast through all these different areas, and these are just algorithms just putting random orders in the market and whatnot. So it'll leave incomplete auctions behind on those types of scenarios, and you need to obviously take that into context as well if you try to trade against that. Okay, so here's an example of an incomplete auction. So we see the market starting to trade down, trade down, trade down. The bar opens at this level here, trades down. Actually, what probably happened here was the market opened here, traded up, and there was an auction in place here, and it did not exhaust itself. So there's 535 printing on the bid versus 2,373 on the offer. So there was business to be done there. The market did not exhaust itself, and it continued basically just to trade right back lower. So whoever was having trades go off here was waiting to see if the market would come back there and look to continue with what they were doing. So by pointing this out, this brings up an interesting idea here. So let's say you see this happening, the market's trading down and it's trading down, and this particular area is an area of interest for you, and you want to establish a long position here. Well, you see that there's an incomplete auction here. This gives you a great heads up. So let's say you're getting long here, and the market finally comes back up. You get one scale out, and we're continuing on. It respects this high volume cluster. Only 52 contracts could trade down to that area at that point, so that means just no more interest there. And the market comes up and cleans up that level there, and you can see that there was 7,232 contracts that traded there versus 4,561 at the bid. So clearly there was a lot more business to be done there, and it was just a good heads up for you in buying this low here, that the market's going to come up and clean that up. And sure enough, it did. But again, you shouldn't take a trade just because of what I'm showing you here. There needs to be another reason. This needs to be some sort of a key support area if you want to buy this, and and manage your position from there. So nice buying absorption here, and then buyers took the initiative to lift the offer by submitting market buy orders, and then more volume came in, filled in this low volume area, and continued to auction higher here, cleared up that incomplete auction. So incomplete auctions also represent key reversals, as I noted. Same with a poor high in market profile or a poor low. So in this example, let's just start daily bar chart with a bracket forming here. The market comes up and tests to see if there's any demand above that key bracket area, and which I'll show you in a minute here. There were passive sellers absorbing all the buy orders up there, and reversed the order flow, and this would be a great trade location, obviously. And the market obviously ran down and was a nice move back down into the bracket. And this is what it looked like on our daily TPOs. As I pointed out, the market forms a poor high there, and sometimes these poor highs represent key reversals, and this is exactly an example of that. The market traded up, looked above this key swing high. This is somewhat of a poor high as well, and could not make a sustained move up there, and the market quickly came right back down. The B period bracket opened somewhere up here as well, I believe. So it just did not trade up enough to establish a lot of excess there. And this is what happened here. This is our swing high. there was 729 on the bid versus 2,683 on the offer. Sometimes you'll see this during a key time change. So like a new 30-minute bracket comes in and establishes this poor high, I guess you could say. It's not always a poor high, but in this situation, we've got an incomplete auction there. So had you seen this without doing research on the bigger picture, and let's say the market's trading up, you're like, okay, great, I see that their market left behind